Hello and welcome everyone to the OMFIF Digital Monetary Institute and Arab Monetary Fund CBDC conference on spearheading digital innovation and cross-border payment for those who have just joined. I'm Kate-Ann Wilson, Head of Policy Analysis for the DMI, and we're very pleased to have with us Emmanuel Giovanakis, CEO of the Financial Services Regulatory Authority of Abu Dhabi Global Market, to discuss the crypto asset landscape in the ADGM. Welcome, Emmanuel. Now, Emmanuel, thank you. Emmanuel brings over 20 years of extensive experience in financial services regulation and management. After joining in 2014, he was pivotal to the creation of ADGM as an international financial center through overseeing its legislative framework as well as managing the enforcement function for the FSRA. Prior to this, he has held many senior legal and leadership roles in both the Dubai Financial Services Authority and the Australian Securities and Investments Commission. Now, over the last couple of years, the ADGM has really positioned itself as a destination of choice for dealing in crypto assets. We saw just last week the Dubai World Trade Center Authority began to follow suit with an agreement with the UAE Securities and Commodities Authority to support trading and regulation of crypto in its economic free zone. So I'd like to invite, firstly, Emmanuel, to give an overview of ADGM's extensive approach and the regulatory framework you've already set for crypto assets or virtual assets, as you referred to them, expanding a bit more on how the ADGM has come so far in this area. Over to you.
Thanks, Katie. Well, esteemed colleagues, ladies and gentlemen, good afternoon from Abu Dhabi Global Market, based here in the capital of the UAE, Abu Dhabi. It's my pleasure to address you all at the landmark Arab CBDC conference. I would like to thank the Arab Monetary Fund and the Digital Monetary Institute for hosting this important event. I look forward to talking to you today about cryptocurrency, what we at the ADGM call crypto asset landscape, which is part of the larger digital asset landscape here in ADGM. But before I get into that, let me update you a little on what Abu Dhabi Global Market is and how our journey has resulted in me talking to you today. ADGM is an international financial centre in Abu Dhabi built on the direct application of English common law. We are a relatively young financial centre, having launched in October 2015. As a new financial services regulator within a new financial centre, starting with a clean slate, we had an amazing opportunity to rethink the way we consider regulatory risk, establishing new and innovative regulatory frameworks, and then considering the way we interact with our regulated firms and markets. We decided very early on to take a proactive approach to ensure that we do not hinder good innovation, but to support and find ways to shape financial innovation in the region. 6 years on, I am very happy to say that, that we have achieved a lot. We've built on the fundamental strengths of Abu Dhabi, being asset management and funds management, and on that strong foundation, we are pushing further and further into the capital market space. This is best reflected in the launch earlier this year of the ICE Futures Abu Dhabi, a derivative exchange supported by both the ICE Group, who operate exchanges globally, and the National Oil Company of Abu Dhabi, ADNOC, with the exchange featuring the trading of the world's first Murban oil futures contract. Importantly, in terms of financial innovation, we have been at the forefront of developments within the MENA region. We pioneered the regulatory sandbox in 2016, which has continued to develop over time into what we now call the Digital Lab, which launched earlier this year. The Digital Lab is both a digital regulatory sandbox and a marketplace where fintechs, innovation, and investors, academics, and other stakeholders can all collaborate and test new ideas under some regulatory oversight by the FSRA. We have to date developed some of the most comprehensive set of rules and regulations in the region, governing digital financial services, digital assets, and fintech more broadly. ADGM set out to develop itself into a leading hub for digital assets with the launch in 2018 of one of the most comprehensive, transparent, robust regulatory frameworks in the world. It was the first of its kind regulatory framework catering for virtual assets, such as Bitcoin, Ethereum, Litecoin, and others. digital securities and stablecoins. It also provides for funds and derivatives to operate in a digital sense, in a regulated fashion within this same space. Importantly, the framework addresses a comprehensive set of risks in relation to 5 key areas, and these are very important, being AML, CFT, investor protection, tech governance, custody risk, and exchange operations. In 2018, most jurisdictions had really only taken the decision of regulating digital assets for the first time with a focus on AML CFT only. However, we felt this approach was to a large degree lacking, and it didn't really promote a holistic ecosystem for digital asset players, entrepreneurs, startups, and investors, including institutional investors, to invest, innovate, and grow their businesses in a reliable, supportive, and well-regulated environment. We consulted with a broad range of parties, regionally and importantly, globally, including other regulators, virtual asset firms, institutional players, as well as law firms and auditors. Through this consultation process, it became apparent to us that those in the industry looking to legitimise their work were actively seeking a robust, credible, and comprehensive framework. Many mainstream financial institutions in the industry were against the practice of regulatory arbitrage, considering a race to the bottom for the digital assets industry not being sustainable. But there was a lack of clarity and direction within the regulatory community back then, and most jurisdictions adopted a wait-and-see approach. We therefore chose to lead by example and fill that void, intentionally setting the bar high and defined our framework in such a way as to benchmark digital assets to the same requirements as traditional asset classes. Addressing a concrete set of risks, we specifically brought into our regulatory perimeter those providing markets in virtual assets. In our view, those virtual assets hold the same form as commodities and tokenized securities in the same way that we regulate conventional securities. In terms of virtual assets, we have the concept of accepted virtual assets, where any exchange, broker, or custodian wanting to use a certain accepted virtual asset within ADGM has to meet 7 specific risk factors, including traceability, security, and functionality. For this reason, we specifically limit the risk that can be brought into our jurisdiction. And regulators and other industry participants frequently engage with us to understand how the process works. Of the current 6,000 estimated virtual assets out there, and without going into exact detail, we let in, less than a baker's dozen. Similarly, in relation to stablecoins, we apply the 7 same risk factors against them and have allowed a few stablecoins to be tested. Importantly, we treat stablecoins in the same way we regulate payments, instruments, and email. It is expected that all our regulated virtual asset firms, where appropriate, will use stablecoins within their systems, primarily for 2 purposes. 1, to deposit value into the exchange custody, and 2, provide an evaluation reference point against virtual assets traded within their platforms. For example, by buying and selling Bitcoin in Gemini, Coin, Circle Coin, and others. But what is perhaps more critical and warrants attention in the regulation of virtual assets in particular, compared to traditional asset classes, is the need for proper technology governance to address the technology risks. If virtual assets are lost or stolen, clearly confidence is lost. Another key area we and our regulated firms have had to put significant resources and attention to in relation to Know Your Token, whereby all virtual assets being deposited or withdrawn from our regulated firms are traceable. If it cannot be traced and properly attributed to a holder for such virtual asset, a virtual asset such as that cannot come into our regulatory perimeter, further supporting our wider AML efforts to prevent money laundering. Equally, we require all our regulated exchanges to conduct real-time surveillance. This continues to be a novel concept where ADGM is leading developments in this space globally. All orders, trades within our markets are also sent to the FSRA's own purpose-built market surveillance system. Financial services regulators globally are watching us closely in relation to this point. We believe our robust approach to regulation of digital and virtual assets is a key pillar of ADGM's strategy to foster sustainable and responsible innovation in the financial sector. As a fun fact, less than 5% of companies that approach ADGM made it through the due diligence to even be allowed to apply for a virtual asset related license. Businesses and consumers holding and investing in digital assets can be assured that our licensed firms comply with the highest standards. In our view, this has all resulted in a very positive outcome for ADGM. We are pleased that major virtual industry players, both regionally and globally, have expressed a strong interest in operating in ADGM. They see it as a jurisdiction where they can develop their business and demonstrate their commitment to being well-regulated industry players. To date, we have 2 fully operating exchanges and custodians, 1 more that's in soft launch at the moment, another 3 that are testing and are in principle, and several others that are working through their in principle, and we have a very strong pipeline of firms coming through. While it has been an exciting journey so far, we expect it to only get more exciting going forward. We have seen and continue to expect to see novel and exciting and different business models to consider. For example, across our exchanges, we expect to see their business models expand from not only being markets in virtual assets, but to also becoming markets in digital securities and or derivatives as well. The implications for their business mode in terms of clearing and settlement are substantial, to say the least, and we will address and monitor these as we go forward. Today's agenda has identified many of the challenges and opportunities before us all across virtual assets, digital assets, stablecoins, and other instruments. We here at ADGM and the FSRA look forward to engaging with all of you as we work together to establish MENA's place within the digital asset world. Collaboration and cooperation are necessary for greater progress in this regard, and engagements such as the Arab CBDC conference provide an ideal platform for the exchange of insights and experiences that feed into our joint aspirations for digital marketplaces. We are on the precipice of a digital revolution in the financial sector, when virtual assets, digital assets will play a driving force. This new frontier will undoubtedly present challenges, but also opportunities for us and for economic growth. And it is crucial for us to strive to embrace it where we can. It was a pleasure to be here with you all today, and I look forward to answering any questions I can. Thank you very much.
Thank you, Emmanuel, for that fascinating overview of ADGM's work and achievements. I think the ADGM's accommodative approach really displays the benefits of regulatory clarity, and it's very inspirational at a time when we've just seen the Chinese authorities make it illegal to deal in crypto, and we've heard Gary Gensler talk about the Wild West rife with fraud, scams, and abuse, talking about the crypto sector. So I just wanted to touch upon one thing you mentioned. You gave us some fun facts there. I think you said that out of the 6,000 estimated virtual assets out there, only a dozen you let in, and less than 5% of companies made it through your due diligence to receive a virtual asset license. I just wanted to ask you, how does ADGM address this delicate balance then of having a clear regulatory guidance, but not driving away business if the requirements are too high?
That's a really good question, Katie. The simple answer is that back in 2017, what we found was industry players, in particular significant industry players, both locally in the region and internationally, were coming to us and were asking us, look, no one has a comprehensive framework. We want to be regulated. We want to be part of the regulated community. How do we do that? And so we sat back and looked at it and thought, well, this is an opportunity for us to look at what's available. We looked around, there wasn't really much out there from a regulatory perspective, and a framework, legal perspective. So we set about trying to set something up where it was as comprehensive as possible, but also mitigating the significant risks that we saw within virtual assets. We call them virtual assets because we adopt the definition by FATF. And so we were very, very conscious of the risks. And I described some of the risks earlier. AML CFT is obviously number one. And so we had to make sure that whatever framework we brought in was not going to compromise our position on that. So another area was tech governance, which I mentioned as well, which is really important. What we wanted people to do was for participants to come in here and establish themselves in a way that would provide transparency and some safety and security for investors. So it was a level playing field. We don't want to be the Wild West, but we want to make sure that somebody is allowing this industry to grow in a safe and sound environment and ecosystem. So we took that opportunity. And as you know, the beginning of 2016, we were the first ones to bring out a regulatory sandbox in the MENA. We've worked very closely with other global regulators who have been very innovative on that front, from the UK to Oceania and others. So we're constantly looking at innovation, because I think I say the word innovation a lot, but it's one thing to talk about it, it's another thing to do it. And so we're very lucky because we're such a young jurisdiction. We have a much easier open platform to build off. So for us, it's been a journey, but an exciting journey, and one where we've learned a lot as regulators, but the industry has learned a lot as well as to what to expect from a regulator.
I think that's a great answer. I think your best practices will then be shared globally, I'm sure. I wanted to hone in a bit on your point that you raised again on technology governance. I think this, exactly as you said, gets completely lost among conversations about crypto assets. Oftenly, everyone focuses on anti-money laundering, when actually, beyond the crypto asset, the blockchain, there really is deeper governance issues here that needs to be addressed. We had on one of our DMI sessions not long ago, the governor from Banque de France also saying the same thing. So I think you've already mentioned the risks of virtual assets being stolen and traceability, but in terms of a more top-down perspective on this technological governance point, what are the remaining challenges? And I imagine we need to move towards standardization at some point. How do we even begin to get there?
Well, I think to get to some form of standardization, we have to have a lot more jurisdictions, firstly, coming on board with wanting to and establishing a framework and a comprehensive framework at that, not just one focus just on one area of risk. So we could have just focused on AML and CFT, but that wasn't a holistic approach in our view. That's why we looked at tech governance, consumer protection, exchange type activities. When it comes to tech governance, I mean, we've spent a lot of time on this area, and we have a lot of information and guidance in our framework around that and what we expect as a regulator with regard to tech governance. We hired experts in tech governance as well to make sure that things like maintenance, development and system software were not only placed in the firm, but were tested well before even a soft launch occurred. So we've been very prudent on that front. And we also require full third-party verification before launch. So that full third-party verification is required to check all those systems and controls. Things like security measures and procedures. I mean, how strong are the firewalls of the entity? That's really important. You know, what's the password management? That's another area that's really important. But we as a regulator have to be able to go in there. We have to have the expertise to go in there and test these. So even with third-party verification, we still go in and test, we monitor, and we continue to keep surveillance of it. I mean, as a regulator, you identify the risks, you try to mitigate them the best way you can. You have to monitor them. And I'm talking to a bunch of regulators predominantly here today, and I'm not preaching anything that's new. I've been a regulator for a long time and a lawyer, and I know you can never completely protect yourself against all risks, but you need to mitigate as best you can. And if you can identify them clearly, you can do that a lot better. And so that's what we've tried to do with tech governance.
We have actually a question from the Central Bank of Nigeria, which on this point, they're just asking, I mean, you've kind of answered it, but maybe in a bit more detail. They're asking, do you need a lot of technical staff at the regulatory body to govern the technology? How do you foster this environment, and what are the kind of skills are required?
Well, you don't need a vast number of people, because that's why you utilize a variety of different third parties and third-party verification. But you do need a core number of specialists. So we went about setting up a tech governance system team. And so that team is led by people that are experts in markets infrastructure, and also programming and computer programming. They can test systems and know how to look beyond those systems and at the back of those systems. So we've had to employ those people, and those people have taught us a lot. I don't come from that background myself, as I'm a lawyer, but I've learned a lot in that area. And so you have to make that investment in that resource. I think if you're serious about this area and you really want it to work and work in a safe and sound way, you need to invest in tech governance, regulatory surveillance, and personnel.
Yeah, definitely. And I mean, we've had another query about smart contracts. I mean, and given your legal background, this must be something that keeps you up at night. I suppose if we are heading towards a potential system where you don't need to trust the counterparty, and you don't have a system of institutions and rules that can carry out a transaction with contract law. You mentioned risks. I know regulators can't cover all risks, but are there any immediate risks when you just look at smart contracts and how they would kind of remove the intermediary here?
Are we talking about smart contracts in relation to crypto asset, or are we talking about smart contracts generically?
Crypto assets and smart contracts, I think that's the questions referred to, yeah.
Right. Well, if they're a crypto asset and they're being exchanged on an exchange in the ADGM, I'm not sure how the smart contract would work in that respect. So that would be an over-the-counter type potentially, or private arrangement, but that wouldn't be something that would work here, not on our exchanges.
No, that's a good answer to that. And then just to hone a tiny bit more in on the comprehensive framework, I think the retail participation is always talked about here. The concerns are always in the news, this high level of speculation, high volatility. So retail participation obviously is not new, but there's a lot of concern around it. How do you address this in more detail? What kind of investor protections are you looking at from a retail angle?
Yeah. Well, our starting point in developing this framework was the fact that this framework was going to have to deal with retail and retail investors. It was never going to be a framework to deal at a wholesale level. We're not in a situation with Bitcoin or Ethereum or any other virtual assets where it's predominantly a wholesale OTC or exchange type activity. The reality is that it's predominantly retail. So the fact was that we built the whole regime based on a retail investor protection perspective. So we put a bit of effort into consumer protection on a whole host of different things, from disclosure to custody to ensuring that the systems and controls of the firms are in place to protect clients' money at all times. So we've looked at it from a holistic perspective at a retail level.
Thank you for that. And just, I mean, still staying on risks, I wanted to just go into more detail on this the stablecoin outline that you also mentioned. We know that they really grease the crypto industry, and they're used towards transferring value between different exchanges. But what about outside the crypto industry? Do you have any concerns about the application of stablecoins beyond this? Or what the challenges that you see, not from a personal perspective?
We're not a central bank ourselves, so we don't deal with systemic risk of stablecoin in the broader economy. One of the things in terms of stablecoin, I can really only speak for the ADGM, and where it's limited to what I described earlier with regard to the facilitation of the trades on the exchange as a mechanism, but that's quite limited. And in terms of stablecoin more broadly within the ADGM, it's got to be clearly backed by a fiat currency. I mean, one of the risks that I've seen personally, and this is just from my personal observation only, is that stable coins at times have a question mark over them in terms of what they're backed by.
Yep.
Because originally stable coins were meant to be backed one-to-one with a currency, like a sovereign currency, a fiat currency. Unfortunately, people are creating these baskets of assets, and sometimes those basket of assets are not always as clear or as valued as they should be, or even exist in some situations. That's something we're not interested in ADGM, and at this point in time, we're very, very averse to entertaining those sorts of stable coins, because that requires a lot of regulation, but more so supervision and oversight. Yep. You can put as much regulation as you like into a framework, but if you're not going to supervise it and enforce it, then I'm not sure why you bother. So the surveillance and supervision and enforcement are key to making it successful.
Mm-hmm. Exactly, and it has to have a good user objective as well. We've got just a quick question from Ripple, just going back onto, I think, the vetting that you discussed earlier. He would like to know, would using blockchain technology decrease the need to vet participants?
No, we welcome blockchain technology. To be honest, blockchain technology is one of the great innovative technologies that's available out there, and we're not averse to blockchain technology at all, provided the industry participant bringing that technology can show us how it works within their systems and do it in a safe, sound, transparent manner.
Yes.
If they can achieve that, then there shouldn't be an issue.
No, fair enough. I'm conscious that we're running out of time, which is a shame, but I would love to get your thoughts on a few more things before we finish.
Sure.
Again, more from a top level perspective, you mentioned the impact on business models. Crypto assets are part of this wider trend towards decentralized finance and tokenization. What do you think of the impact on traditional finance in the long run, and where do you think this market is going? I mean, I've heard it compared to the dot-com bubble a lot, where a few companies fail and leads their way to a few big tech. So is there going to be valid use cases from all these 6,000 crypto assets on the market today? What do you think?
I've been I have a few grey hairs, and I've been around for a little while. And what I've seen is that fintech was around a lot longer than the concept of fintech recently. I mean, we had internet banking. No one went around calling that fintech at the time, but that was fintech. I think overall we have a successful financial services global industry that's facilitated capital and financial services to users around the world. The fact is that users like convenience. So at a retail level, digital works really well, but even at a wholesale level. Now, financial services and the financial services industry as a whole needs to adapt to that change.
Yep.
And otherwise, those financial service providers may lose market share. Now, I'm not a market participant. I'm a regulator. But importantly, as regulators, we need to be conscious of that. But I think long term, I think the reality is that eventually we're not going to talk about digital assets. The financial services world will just have migrated into a digital world. And that digital world will still have the same old concepts of securities, whether they're tokenized or not. It's still going to be a security, right? It's still going to be a deposit. So I think this is a transition period for all of us.
Yep.
So we have to think about how we're going to transition ourselves. And the older participants here today probably will find that more confronting. And I understand that. But we have to confront the fact that the world is changing. It's not going to go backwards. And where are we moving ahead to? So we think it's better to be innovative and moving forward than stagnating.
I think that's an excellent note to end on, and also a very exciting one. Look to the day where we're not even calling them digital assets, they're just another type of asset. So thank you so much for joining us, Emmanuel. You covered so much ground. We look forward to following what the ADGM does next, and look forward to seeing how it sets its reputation across the world. And for the audience that's still online, please stay on. We have an upcoming discussion on financial inclusion on the blockchain, exploring how public blockchains can be utilized for CBDCs in the Middle East. Thank you again, Emmanuel, and have a lovely rest of your day.